Real estate in Florida has faced some very unique headwinds through 2023, and 2024 only promises from this vantage point to get much worse. On today's video, I'm going to go over 10 predictions that you can expect if you own a home in Florida, you're considering buying here, you're considering retiring here, what you can expect under certain circumstances. Because right now, if you're a buyer looking to buy in this market, you are facing some of the highest costs for insurance, some of the highest cost of taxes on property that we've seen in 2 decades. And ultimately, all these things are going to affect your purchasing power if you're looking to buy here. Additionally, there's going to be major shifts in the market with what you can actually rent. We're going to see major shifts in the residential rental stock next year. We're going to see major shifts on both landlord and retiree affordability. And ultimately, if you own a home in Florida, I'm going to tell you what you need to be thinking about with regards to exactly how much it's going to cost as we go into 2024. If you're new to the channel, I'm a self-proclaimed real estate expert. However, I've been a part of nearly 4,000 successful home sales, flipped more than 200 properties, and there's no other channel on YouTube that keeps a close pulse on the data and changes in the housing market in the Florida area. I've given a ton of time and thought deeply about what is going to happen based on all the data, the cost of living, the marketplace changes that are coming for 2024 to give you this top 10 list of what you can expect to happen in the Florida marketplace next year. So if you appreciate all the research and time that's gone into this video, smash the like button. But without further ado, let's start with number 1.
Change is coming, my fellow Americans. You will own nothing and you will be happy.
Prediction number 1, cost of living for owners, buyers, and renters alike is going to climb into 2024. And here's what I mean. If you already own a home, you are seeing the noose getting tighter, especially on a massive retiree population base who, after their HOAs have gone through the roof, they cannot take much more. We're already seeing this playing out. I'm also going to talk about you're seeing investors starting to liquidate their properties. I'm seeing properties, even BlackRock owned, some of the largest Wall Street owners of real estate are shedding property. They're shedding their investments because the cost of holding them is so high, it's eroded their ability to make money. Now, allow me to show you exactly what I mean.
Right now, they're estimating roughly 30% average year-over-year increase.
It's just too expensive for me because I just started out my career, so I don't think I'd be able to buy a home here.
It's not the news homeowners want to hear. One of the largest reinsurance agencies in the world predicts your insurance company will pay more for its insurance in the new year.
Yeah, this has already been a crisis. So what
they're saying is that this is an upline issue. So your insurance companies in Florida are carrying insurance to protect themselves. It's layered like a cake, they say. But let me show you another thing right here. So if you look towards the middle of the article, it says in 2024, it's predicted your company could be paying as much as 40% more. They're saying that the obvious feature here is that is going to be passed on to the consumer. It has to be, right? Because they can't pay it and not make money. And ultimately, what's going to happen is this is going to take our insurance premiums even higher. Most of you that have been tracking this issue don't know, but the average reported cost in our media here that's coming from the institutes that track insurance costs are saying it costs homeowners here $6,000 a year. And it's going to go up possibly 30-40% more next year. Now, to validate this issue, I called one of the largest brokers of insurance across the Central Florida market. They go coast to coast through the mid of this massive state. And I asked them directly, I said, look, you guys are dealing with all 30 to 40 of the property insurers in Florida. They said, yes. I said, what do you expect to happen? He said, you know what? It's $6,000 on average now, $8,000, $9,000, could be $10,000. You're going to see the quotes getting higher in 2024. Now, folks, you know I've been doing cost analysis on a lot of these communities where some of these HOAs in Florida have now jacked their monthly fees up double, triple what they were pre-pandemic. Why? Because the cost of taking care of the association has gone up. Some of these, we have condominium buildings and things of that nature that are woefully underinvested in. The state's requiring them now to spend more money to protect people inside of them, but those costs are now coming all at once. Ultimately, a lot of retirees are suffering. You're starting to see a lot of cascading inventory in marketplaces where the median age is higher. And I believe ultimately that's proof that ultimately these people cannot care for these properties anymore. But it's not just the little guy. This is a BlackRock owned home case I've showed you before. This can be multiplied out 100 times over. Because one thing you got to understand in Florida, that when you start to buy a house as an investor, You might have bought it from an owner occupant who had a very low tax rate. They had a very low protected amount they're paying every year. And owners don't have their tax escalate, but a max of 3% if they've got what's called homestead protection. But you don't have that coverage with investors. So take this is a specific case where nearly half of all the money that was coming in on the rent of this home to BlackRock was consuming nearly half of every dollar just for projected insurance, just for tax, and not even considering what the HOA costs are in this neighborhood at this point. But look at this. In 2016, they bought the house for $415,000 according to Zillow. Their taxes at the time for this home was $6,500. Their insurance approximately $1,700. The rent was $2,850 at that time. So if you add up how much they were pulling in, if they rented the thing all year long, they were making 76% after they paid taxes and insurance. But in 2023, $851,000 estimated value. So they've done great on the capital. Taxes are now $12,000. They've doubled in about 6 to 7 short years. You've got the same time, insurance has tripled. And I believe it's probably higher than this. This is an estimate because I went a little higher than the Florida average for a house that's 4,000 square feet. So if you look at that example, after just the taxes and insurance, BlackRock was making around 59%. This is all the money. They have to pay a manager. They have to take care of other costs associated with the house. They have taxes on the money, all these kinds of things. And when you factor all those things, they sell the house. They're getting out of the property because the squeeze is bad. And folks, here's the deal. Because of how we did year over year, Florida in 2023 is going to see property taxes assessed higher in 2024. Prediction number 2, and this is the scandalous one. I'm predicting that the state of Florida will see its year over year home value drop by 5%, leading the nation, not in maybe the number 1 spot, but most likely in the top 5 in terms of year over year value loss. I will make a sub-point prediction to a 5% value loss. I predict there will be marketplaces in Florida that see 7 to 10% drop in price year over year by the end of 2024. Let me show you what I'm talking about. If you look right here, Redfin actually just made its national predictions. So you can see right here that at the end of 2023, you can see right here, Redfin's economists say that we are going to end at 3% up year over year. You can see down here, end of this year, this is going to be the landing spot for the rest of the US. You understand, Florida is likely operating 65% below this mark. Okay. We also are way up on the national with regards to months of supply, how long it takes to absorb our inventory, and our inventory is climbing faster. All those are factors that lead me to believe that if nothing else changes, and honestly, there's not a lot of great indicators saying it will, that we're going to over-index what the nation does next year, producing a larger price drop than the national. So you got to understand, look at this. This is Redfin's prediction that the national will lose 1% in its value. So they're saying that the entire nation, including its best and most favorable marketplaces, where somehow it's still affordable and still turning over and people wants to live there, because there's going to be some marketplaces that are going to be up 2, 3, 4% in the nation next year that are going to drag the entire economy of U.S. average housing up a little bit. So what they're still saying at the end of the day, there's going to be many markets that, like Florida, are going to affect that and take the entire nation down 1% in home price. And again, they're predicting a lot of these losses right here. This is peak season, folks. They're saying we're going to see the bottom come out through moving season, through the time frame that actually we see the gains. We see life coming back in the economy. So I'm really as shocked as how they're saying that there's really not going to be any further loss taken on in the fourth quarter. Folks, I'm not trying to stress anyone with this particular prediction, but the reality is we're trailing in terms of the market health in our housing market. We are seeing our numbers shifting. We are seeing our printed year over year home value for 2023 far behind the national average. So you can take an estimation based on where we're heading, what factors we're dealing with next year, and you're going to see that you're going to have a lot of markets easing up on price. And again, I believe the entire market of Florida is going to see down 5% with 1 to 3 markets down close to 10%. Thinking about selling your home in 2024? Do not make the critical mistake of paying $15,000 to $20,000 more, losing money at sale. At NestShare, we list your home for just 3%, saving you $25,000 on the sale of your property. Don't pay outdated commission levels of 5 and 6%. You can trust NestShare to sell your home right and pass the savings on to you. Visit nestshare.com before you list your next home, and don't let anybody you know sell before talking to us. My next prediction is that Florida is going to be one of the first marketplaces in the country to go plus 6% months of supply. Lest I lose any of you, this is one of the most important things that I'm going to say in this video. Months of supply is if you were to stop listing homes in any marketplace, the entire state of Florida, based on how many buyers are in the market participating, how long would it take you to sell them all? Marketplaces are strong and healthy when buyers are so ready that they would wipe all the inventory out in a matter of a month. You got to understand, Florida is nearly 20% higher than the rest of the nation right now, running over 4 months of supply, meaning we don't list anymore, 4 months to get rid of everything. And ultimately, you got to understand, in the face of higher cost, some sellers cannot afford to hang on. Folks, allow me to make some distinctions here. Look at this housing graph. What do you see? Florida is seeing a run up, which is aseasonal. In this point in the marketplace, I've been saying this before, this is when we start to see a little bit of a tapering of listing activity. But something is driving people to push their homes into the market, and it's going up. Look at this, folks. It's like a stair step. You see it go up, and then it goes up again. Ultimately, what took place at the end of last year, interest rates rose, and with it, buyer demand stalled. So inventory held and was not absorbed. Even when we peaked back at the beginning of this year and interest rates dropped, they fell almost to 6%. And there was a little bit of a tear for buyers. They came back, but it held. It did not drop. And now it's going up again. Now, folks, we're nearing 120,000 homes. Now, that isn't the big deal. What you've got to see is this is a problem. When you have 120,000 properties and you're selling 20,000 in a month, then you have a 6-month time frame to absorb all of this property. Now look at this. This is October. This is one of the worst months that we've seen anytime recently, except for towards the end of last year. But you can see that it's a steady downhill climb. And folks, if this keeps going down while this keeps going up, you're going to see 140,000, 160,000, while there's only 15,000 being absorbed, which means you're running towards a 7, 8, 9-month supply of absorption. Now, folks, listen to me. It doesn't matter if you do not have 250,000 homes on the market like we did in 2008, okay? Understand this. In 2008, 9, 10, when Florida's price cratered, there were 50, 100,000 more homes than there are right now. But that's not the point. What drove prices into the ground was the distance for how long it would take to get out of the market if you were a home seller and you had to sell. How far did it get? Well, in 2009, we saw when months of supply was 7, 8, 9, 10 months, that there was massive shockwaves to prices. And that's what ultimately tipped it over. Folks, we are very close to a 7-month supply. Like, this is epic. You know, you could go state by state by state and find most states are nowhere near to this combination. So folks, listen, when you hear agents and you hear professionals in economics saying, we're low on supply, don't worry, we're historically down, there's not enough homes out there for sale just yet. That's one side of the equation. You have to have a level of absorption. If it takes a person 7, 8 months to sell and they lose their job, then it's not going to be a time frame where they're just going to sit there and wait it out while they take the beating and go into foreclosure. So what is the prediction here? My prediction is between January and May, you are going to see 7 to 9 months of supply. The rate of absorption is going to get very tricky, and you're going to see the most motivated sellers taking a real crack at getting out of the housing market, doing what they have to do, which will precipitate in the price reductions I told you about in the last prediction. Folks, the next prediction I have is going to be the most dire in regards to surging home inventory, in regards to your ability to sell in 2024, in regards to home value plummeting in certain areas throughout Florida. And that is national home builders, where they are most active in specific areas of the state, are going to tip real estate markets over as they fight and throw elbows against existing home sellers to get out of those markets. Folks, pay very close attention The next 5 minutes of this video is critical regarding the real estate housing market across Florida. Check this out. All right, folks, take a look at this. This was from Redfin in August of this year, okay? Now you got to understand this is most likely in many parts of Florida higher than is being reported. What it says is that the housing market and builders surged since the pandemic era, and they actually are producing 1/3, 1 in 3 of all home sales. Housing stock is coming from the brand new builders. Now, why is this important? Well, because the reality is we know buyer demand is way off. It's decades low amount of buyers activity. Why? Because interest rates are plus 7%. I gave you an early prediction. They're going to stay that way. So let me give you a sample case where what I'm saying isn't happening. So you have a case to compare with a couple of the markets that I'm going to show you are being tipped over by exactly what I'm saying happening in real time. Right here, you have Miami. Look at Miami. Like most markets in the 2008 bubble, you had a ton of total permit activity that drove prices through the roof. And then all of a sudden, when home prices were falling, the builders and everybody took risk off and they disappeared from the market. It slammed permits into the ground. Now, but look what's happened in Miami. Are they producing more? This green line is residential housing. This is condos and multifamily. Are they producing more than the bubble or far less or similar case? It's not even comparable. Look at Miami's carrying about 5,000 single family home permits right now. And it's been in that range. Look at this. Back in March 2020, before the pandemic started, 7,000 permits is what they were holding. In the last bubble, they were producing 3 times as many homes. Okay, so 3 times as many then. Then the pandemic, they spiked at around 8,000. So they were 30% of the last bubble. And coincidentally, look at their home price. As you can see right now, because they have less builder activity in this metropolitan area, they're up 4-fold what everybody else is in Florida. But let's check out how the other half is doing. So here in Jacksonville, you look at how much volume took place in Jacksonville back in 2008. You spiked off the charts. Total permits were 25,000. But looky here, they came close to 25,000 all over again. And now Jacksonville is down. Jacksonville is actually down -2% year over year in its home value. Let me show you another case. This right here is the Villages. Now, the Villages doesn't have a track record to show, but we do know when they came out of the ground with much of that area of Sumter County for the 55 plus, this is a mega famous active adult, really full blown community. It's makes up the majority of this county if I had to guess. But you had 2,000 some odd permits here. They went off the chart. They really just started to taper a little bit towards the end, but they're still really above what they've been running pre-pandemic. Because here's the thing, this was what the Villages needed to carry to absorb inventory between 2015 and 2019. They're around 1,900 permits. They're way over that even now. And you got to understand, now there's a lot more houses in the Villages. And look what's going on in the Villages. Right here in the middle of the map, you can see that they're down 4%. Okay, so Miami's +5, the Villages down 4, Jacksonville's down 2. Folks, I could show you county after county across Florida where the most active counties and increasing amount of permits being pulled is eroding the market. Let's go into exactly how this is happening. Folks, you got to understand this. The really scary underbelly of all this is not that the Villages are trending -4%. It's the fact that the builders in the Villages are dropping the price. And this is in Jacksonville. This is around Tampa. This is around Orlando. Anywhere where you have a metropolitan area where there's higher elevated permit pulling, you are going to see builders who are eviscerating hidden incentives that home sellers can't produce. So builders are in essence, in some cases, reducing their price 5, 10, 15% for a brand new house versus resale. Let me dive in and show you exactly what I'm talking about because it will blow your mind.
The builders are piling on tons of cash on the order of up to $80,000, which I'm going to show you here in 1 second, to incentivize the buyer to pay a crazy high price. So folks, what's going on? Not only are the builders slashing prices, but they're using 3 mechanisms to give thousands and thousands of dollars back on the order of 80 grand in some cases, back to the buying parties that are not public reported, that are affecting your home's value and nobody knows about it. And here's the 3 ways. Number 1, buy downs. Buy downs can cost $20,000, $30,000 or more per house. Number 2, on top of the buy downs, which are newer to the market, they're still giving many of these buyers on nearly every transaction 10 to 20 grand additional to the buy down for their closing cost. And if that wasn't enough, they're giving the buyer's agent that helps the buyer come to the sales office 5 to 10% of the sale price money straight to their pocket. And in today's world, a lot of that commission money that's handed over to the buyer's broker ends up being credited back to the buyer as a concession to help incentivize them into the deal. Folks, the insane fact is that none of this is public data, which means when you go buy a resale home in the same area, the appraiser who goes in and is supposedly protecting your interest and your banker's interest on the value doesn't report any of these funny money shenanigans that are built into the price of all the neighboring new construction homes in the area. Folks, if you have duct tape nearby, wrap some around your head because what I'm about to show you will make your head explode. This is an example of how much money the builders are throwing at their sales, okay? Now remember, this is side by side, the resale used home market. They're not putting all these incentives. They're not packing them in. So there's nowhere in the realm of discounting of the price that they're seeing in the builders. And this is why a lot of people are complaining they can't sell. Look at this. In this case, we're going to give your realtor a $5,000 first line up here, $5,000 bonus for your agent. So in this $525,000 house, the realtor was making 15 grand. They're going to make around 20 grand, because they got to walk you into the builder's office and they got to write the contract. Well, no, your realtor doesn't do that. The builder does that. They take a picture with you in front of your empty lot, and that's exciting, but they get 20 grand and that's good. But look beyond that. So to give you this rate, which all builders are offering 5.25, 4.99, 5.75, 5.99 for the builder to give you this particular rate in this example, which this has happened. I got this email in the past week. So 5.25 rate for this illustration is going to cost the builder on this scenario around 30 grand. Plus, you're going to close with as little as 13,000 out of pocket, which means they're going to give you a bunch of closing costs. So this is a realistic example, folks. So imagine in this case, a $525,000 house. Okay. Now you see, it says right here, $500,000 loan amount. Because if you buy a $525,000 house, most people don't put a lot down. It's 5%. So their loan, they're borrowing 500 grand. Realtor gets the kicker. The buy down's 28, 15 for closing costs. So all of this combined, you have a $48,000 de facto price reduction, which gives you a $477,000 net price. Now here again, this new construction net price at $477 is competing with the resale used homes, which are now coming back to the market. Some of these communities take 3-4 years to build. You've got used homes, 1.5 years, 2 years old. Those people are moving. They go ahead, and you've got Ted and his friends listing his house on the market at $540,000 because he put curtains and blinds and a couple ceiling fans. He's a good dude. But he's on the market now for 3 months, scratching his head, and he can't figure out why. And again, all of this money, folks, doesn't show up in any of the records. So the appraiser, agents, none of them know. All they see is it recorded for 525, but they don't have the other 50 grand. And folks, that's just the tip of the iceberg. Look at this. No tricks with these great prices. Selling homes is a lot less spooky. For a limited time, partners are going to get 10% in real estate commission. Multiple files, 10%, 10%, 10%, 6%, 6%. So this is in Florida. This is a major, one of the top 3 largest builders in the country. Okay, this is not a one-off offer that they're doing. Let's say you bought your home in this neighborhood a year ago for $975,000. And then you find out the builder has cut the price a little bit. They've reduced. Okay, so now it's not $975. Let's say they're asking $934, $990. See this column right here where my cursor is? They want to get this thing closed in the middle of November, which is the month I'm shooting this. 10% commission offered out of the purchase price of the $934,000, which might have even been reduced over what they used to sell them for. They're giving almost 100 grand to the realtor, to the buyer's broker. Now, this same builder offers the same things on top of that massive commission. They offer buy downs, they offer closing costs. So if you do quick math on a normal line of what they might offer on this sale, the net sale price is $784,000. Now imagine, folks, your neighbor bought into the neighborhood in the high 9s. And now this is what's going on. Look, it's not a surprise. This graph right here is the actual median home price for new construction. You can see it's fallen 12% from the top last year. Now you got to understand what makes this graph is the public records. What doesn't show up on this graph is all the juicy props that the builder's putting in that are in hiding that nobody knows about. And I just showed you, okay? So if we have from the top down, the builders, folks, The builders, these are the people that lead the market. Do people pay more for new or they pay more for resale? Do people buy and pay extra premium for the privilege to make sure no one has slept and died in the house they're about to buy? I'm telling you, with 20 years experience, they pay more. In some cases, they pay 10% more. So we're looking at the market trend at the busiest sellers moving actual real estate in America. Look what it is. 12% falling off the top and 16% porked hidden. Folks, if all of this money wasn't porked and hiding and was actually put on the price, they wouldn't be holding this price at $934,000 to get it sold. They'd be at $784,000 in order to get the property to move. So what I'm saying, folks, is that it's not 12%. It's a lot higher. It's 6, 7, 8, 9% more at least, just on the examples I've given you today. Now watch this. You want to see something that's really going to make you sick? Is remember I gave you the analogy of the tale of two sellers. You have Ted and the gang who's sitting there trying to sell their house against the new homes, and a lot of them aren't selling. But every once in a while, an unknowing, unsuspecting victim comes along, bites the hook, and gets took. Look at this. This is a case that just closed this month. You can see in hiding. I've got to obscure a lot of this for the sake of YouTube not taking my videos down. But you can see this is the floor plan of the house I'm about to show you and what the builder actually moved it for just previously to this sale. Okay, so this was a recent sale, $399,900. This particular buyer was cash buying in the resale market. I know exactly what was paid on commission. There was no extra money given to the realtors. They didn't give thousands extra to juice the deal. And because it's a cash buyer, there wasn't any funny money. This is a used 3-year-old home, folks, sold cash for $399,000. Now check this email out, folks. This is an email from the same builder for the exact same home that transacted just before that last house. But nobody knows. The realtors don't check the comps where the builders are closing their sales. The realtors don't check what the builders' homes have sold for because it's not easy. When a builder closes a sale, it's not sold in the multiple listing service, which means it's not tracked all over the places that realtors do research when they're helping a buyer buy a house. So most brokers don't know and aren't checking for this. And they surely don't know about all the $40,000, $50,000 in pork that's pulled out of the price because that can't be known, okay, without a significant amount of research. But look at this. This is the same exact house, same exact build. It was QMI, which means the builder it was a quick move in available, meaning they just built the house. They're paying the interest. They got to get rid of it. $371,000. Remember, the other house was $399,000 to a cash buyer. This one has another $2,500 of pork to the broker. So they're offering that cash to the broker. $15,000 in closing costs, $12,000 in buy down, which by the way, folks, I don't know the exact buy down. I'm estimating it and I am telling you there is probably a 90% plus chance that it was much higher than 12 grand that I put in this field. So you take all of that off of the actual 371 and the net price of this house was $341,500 sold before the other house that I just showed you. That other 3-year-old house that has the danky smell of the previous owner and their pets and all that didn't have the new. $57,000 more. Now, folks, here's the deal. The builder's not doing anything illegal. They're not even doing anything unethical. Everything they're doing is within the confines of proper disclosure to the parties. Now, on the other side of the transaction, you can be mad that the broker who represented this cash buyer made 10, 11 grand, and ultimately they paid full price. In fact, they paid far more than what a new construction home had just recently sold for. But additional to that, you got to understand, some of these agents, they're not good at their craft, okay? Everybody is different. It's no different than going and finding an eye doctor. This particular agent, if the buyer had done just a tiny bit of research that's available online, they would have found that over the past 4 buyers that this agent represented, all of their buyers paid top dollar, nearly full price. And many of the homes that the buyer was represented on in those last 4 transactions, there was no reason for it. They were on the market for long periods of time. And had the buyer agent actually built some chops and negotiated harder, probably could have saved each of their buyers more money. But folks, my last parting comment on all this is you have to make sure that if you really want to sell your resale home used, you need to see what the builders are doing. You could pull the whole stunt of going the fear of missing out price point where it's really, really high because you're trying to track against what someone got 2 years ago. You can try all that. You can test it, but it'll bring your home on the market and it'll probably result in a cascade of price reductions if you are to sell.